So let me play this first. The importance of that little bit of history will come to the fore in a moment, and it's not a property play. We've had too many of them already tonight. That shelter was built in 1822 by a guy called Sir William Hillary, who's best known as the founder of the RNLI. He was distressed when a ship called the St. George was shipwrecked prior to 1820, and the sailors all lost their lives. So he basically built a shelter, put provisions on it for shipwrecked sailors to go to thereafter. The reason for the relevance is it's built on a rock, and the rock is called Conister Rock. If I move forward from 1822 to 1935, there was a group of businessmen on the Isle of Man who were starting a bank, and they wanted a name for a bank that was rock steady, steadfast, there for the community, so it became Conister Bank. And Conister Bank is central to this group of companies. This is basically this is a presentation in 4 lines. What we have in the group is 2 banking licenses, one in the Isle of Man and one in the UK, and we arbitrage between the 2 rates of deposit and deploy that deposit in the variety of subsidiaries that we have that are lending companies in certain credit sectors in the UK mostly. We deliver strong investor returns, and you'll see that in a moment when I move on to that screen. As I said, we are domiciled in the Isle of Man. We do most of our lending in the UK. These are the major operating subsidiaries. Conister Bank, 1935. Banking licence in the Isle of Man, same banking licence as Barclays, HSBC, NatWest, etc. We've got a banking licence in the UK, which came through in September 23. Payment Assist, we finished that acquisition in September 24. We bought the last 49.9%. It is the UK's largest buy now, pay later in the automotive industry. We'll talk about that one. Manx Ventures, that's the sexy arm of the group. If you imagine, Conister Bank's regulated by the Bank of England, the FCA, the Isle of Man FSA. Payment Assist is regulated by the FCA. It's nice to have a subsidiary outside that regulatory envelope where we can actually do more M&A activities, and we'll talk about that. So those are the 2 main 3, but moving along, Edgewater is the largest wealth management business on the Isle of Man. Below that is Calm Wealth, which we bought in January this year. We'll talk about that in a bit of detail, but I was looking for a wealth management business that had a very lightly used license, because I didn't want the legacy of much activity, but I wanted the license going forward. Ninkasi we started that business from zero. Ninkasi, BLX, these are businesses that we started from zero. These were people coming having conversations with me about business ideas. We use Manx Ventures. Ninkasi is now the biggest lessor of fermentation tanks in the UK. It's also now into the Benelux countries. It has carbon capture machines for the brewing industry. But it was all about finding a business which I really trusted the management people. I loved the idea. It wasn't a sector which was going to butcher any other revenue streams that we had within the group. BLX is a subprime business. Manx Collections and the FX business are a bit raw and seal. They do what they say in the tin. And Blue Star at the bottom right, they were in this, that's a broker that was in the software sector. We really liked software. It was great yields, good use of money. So we did what I quite often talk about with the first dance. You dance around the handbags, get to know each other, put a facility in, understand the business to a greater extent, buy the business, take their margin out. You've captured that margin, you own the end customer. So we'll talk about the top 3 in a bit more detail, and obviously I'll happily take questions on any of the other 7. The board of the listed entity. We've got Jim Mellon, the executive chairman, who's well known, I'm sure, in this room. Jim's an 18% shareholder. Dr. Greg Bailey in the bottom row, second to the right, is a 12% shareholder in the business. Jim and Greg are deemed to be acting in a concert party because they've co-invested in other entities before. But Denham Meek on the top row, who's been Jim's right-hand man for a lot of years. Then unfortunately, you've got a picture of me. You've got my group finance director. Bottom row, we've got Alan Clark, ex-partner at EY, Greg Jones, ex-tax partner at KPMG, John Spellman, NED of the group, but also the chairman of Conister Bank Limited. Just to talk about our shares and who we are, we're listed on AIM. My apologies for that, whoever's in. Share price 25.5 pence, market cap 30 million. We're trading at a discount to NAV of about 18%. Last year's profit 9.9 million, year before 7 million, the year before that 5 million. We've been in a steady profit increase year on year out. We've got 119 million shares in issue, and unlike a lot of businesses on AIM, we've actually got quite a large free float of nearly 50%. We'll come back to some of this in a bit more detail. Our cost-income ratio continues to improve. It has done year on year, and that's driven by top-line increases. We invest a lot in technology to try and ensure that we don't increase the overheads. We're also operating almost in a sector where there's not a lot of unemployment. So therefore, you're far better to actually just use technology. AI is everywhere in the business. I'd actually say to anybody in the room, if you don't have an AI strategy, you've probably got AI in your business, you don't know about it. You need to rather have AI by creep, you need a strategy to adopt it. Advances have grown, but that's a bit like vanity, or if there's golfers in the room, that's like driving for show. You putt for the doe's the profit. We can see that we've got the 9.9 million. EPS increased by nearly 50% last year. Return on equity, 23.8, which is a very good number, up from 20.6 in the prior year. So we're a hugely positive business. All the stats are going in the right way. The strategy about deploying liquidity that we can get raised really cheaply amongst all the businesses into credit markets that are quite distinct is a straightforward strategy, and we supplement that with acquisitions. Share price history, in the shaded area on the right, you can see what's happened since the year end. Operational highlights. As I said, we bought this business, Payment Assist, the last shareholding of it in September last year. We've now integrated that business to the extent we want to integrate it within the group. The UK deposit license came through in the tail end of 2023. We're using that license now. That's totally online. If you look at the payment comparison websites in the UK or Martin Lewis, you'll see us in and around there under Conister Bank. We've started the process of lending into or gaining a consumer credit license in Ireland. We'll use that to passport through into Europe. The good thing about Europe is if you've got a consumer credit license in one state, it actually allows you to passport in all the states, but all the states have nuances about their consumer duty obligations, but that's absolutely fine. Expansion of Calm Wealth. I'll talk about that. I'll talk about it now. Calm Wealth was that management company, that wealth management company that we bought just recently, and I wanted a lightly used license. We're going through a variation of permissions with the FCA at the moment to get general insurance license for it. We've got a general insurance business on the island. What we're going to do is use the general insurance product in our Payment Assist customers. Payment Assist has got about 1 million unique customers, 7,000 garages on its roster. Every one of those garages needs PI insurance, indemnity insurance, buildings insurance, content insurance, vehicle insurance, shareholder insurance. So we can wrap all that up. I call it admin. We can wrap all that up for a garage and support it with a premium finance product, which is a less than a 12-month product. Then we'll get two profits out of that one transaction, whilst actually supplying something to the benefit of that customer. So Calm Wealth will be good for us. Technology update. We're constantly looking to ensure our technology is scalable. We've got to make sure that we push the overheads down in the business and be as efficient as we can. I spoke about the three main operating subsidiaries. Conister Bank is central to this. I don't even mind if Conister Bank's not the most profitable business in this and is operating in all the operating units, it's there to actually raise the liquidity as cheaply and as efficiently as possible. Parent Assist, as you can see, its profits went from 2.6 to 4.4 million. We paid 5 million for that business. It lent 180 odd million last year. It'll do 225, something like that this year. Manx Ventures, that's the sexy arm for us. I've really got to stop saying that. It's the non-regulated arm of the business. 1.5 million. It got dividends from its operating units, about 1.1 million last year. Profits are substantially up year on year. But if we take each of them in detail, and we'll focus in on Conister Bank to start with. It operates facilities between 1 million and 100 million pounds. In fact, let me just step back for a second. A bit of banking numbers. In the UK, there's 11 clearing banks, but there's over 350 licensed banks. That means over 300 banks in the UK bank through a bank. So over 300 banks in the UK are charging their customers a double charge. I'm not in the retail sector because I can't see how that can be value for money for the customer. So I don't want to be there. But that's the big opportunity. That's why the Bank of London really went into that market. If you can get a clearing bank license, in theory, you've got a great opportunity. But that's not the opportunity for me. The opportunity for me is this. There's 3,000 lenders in the UK who are not banks. So these could be lenders in market specific. They could be premium finance, could be buy now, pay later. It could be vehicle, it could be retail. But the market specific, well, it can be geographical. It could be, I only want to lend within the M25. But those non-bank lenders raise their money by one of two ways. One, by either being supported by high net worths, or two, by some of these 300 banks. I have no brand presence in the UK. I'd get sacked if I tried to get a brand presence in the UK. It costs tens and tens of millions, and I'd never be a Metro, I'd never be a Virgin. So I would get no support from my fellow directors or indeed the shareholders if I said I wanted to build Conister Bank into a brand presence in the UK. The only brand presence I need in the UK is with these 3,000. They need to know I'm here. Market size, 15.7 billion. We've got 2%. We've got relatively little. Now this is where it gets really interesting, or maybe this is where I get a little bit too intense. On the Isle of Man, there's 40 billion of deposits. 40 billion. Of that, 20 billion is my sweet spot. 20 billion is fixed rate or notice accounts. And the reason why that's my sweet spot is I only do fixed lending. So I know my margin going in. I'm not at the vagaries of interest rates. So the opportunity to deploy that 40 billion or 20 billion as it might market isn't really in the 86,000 people in the Isle of Man. It's in the 65 million people in the adjacent isle. Sorry, it's called the adjacent isle. I've really went Manx. In the Great Britain and Northern Ireland. So that's where the opportunity is. And what we do is because we don't actually have any brand presence, we use these people here. These people have probably already got facilities. So say they've got a £20 million facility with Aldermore, Siemens, whoever. Then I can go in there, and they will be paying 10%. I thought the interest rate for the Scotch Corner development was really cheap. It's well done, that's great negotiation. But that could easily be at 10%. I can actually go in there and put my cost of funds in there, which will be, say, 4%. I'm saving that business £1 million a year. It's not changed its management team. It's not looked for new products. It's not having to find new markets or sectors. All it's done is changed its funding. But for me to give that business £1 million of additional profit, I don't want a return on debt. I want a return on the equity because I believe in you as a business. So that's what we do. We take stakes in businesses to give them cheaper cost of funds to actually grow them, but only in sectors that we like. If I go back to 2016 when Boris got elected, we knew Brexit was going to happen. I took the whole portfolio and said, right, we need to move into secured positions. We know Boris like big infrastructure projects or anything infrastructure related. Let's make sure we're in there. Get out of an unsecured consumer credit market, for example. And we didn't, obviously I had no idea about COVID. It happened to be the right move at that point in time. But where I'm coming to in all of this is, these non-bank lenders were still around. They were still lending. And as long as you're back in the right sectors, you're funneling your money straight into that consumer. Yeah, so 84% of our lending's done in the UK. So the growth plan's pretty straightforward. We've got huge organic growth opportunity. There's the loan book growth again. And this is really what we're going to do. Leverage the ability to raise liquidity, deploy it into these non-bank lenders. That's Conister Bank's strategy. The only addition to that is, and to its fellow subsidiaries. So if we start looking at Manx Ventures, which is a holding company, we've done 13 investments at Manx Ventures in the last dozen years, either wholly or partially in terms of equity. It receives 1.1 million of dividends. That's a list of the businesses that it deploys, and what they've all got in common, with the exception of the wealth management businesses, is they all need liquidity. The cheaper liquidity, then the better. And also, it's not just the cheap liquidity, they're in sectors that we know are profitable. So they're in this business here. It lends to sole traders, small businesses, high yield, but the management team are great. So that's a safe lend. Buy now, pay later, less sort of fermentation tanks, second charge mortgages, soft assets in Blue Star. So it's all markets of which we've got belief in and have proven to be resilient going back to Boris's time in 2016. The growth plan for Manx Ventures, and it's about this, it's about monetarising. So it gets dividends. All these businesses are increasing their NAV. We will look at IPOs. If you take payment assist, you saw it was 4.5 million. Our profit was 9.9 million. It's going to go from 185 to 225, I think it is, in lending year on year. There might be more value in us IPOing. So that's something we could do with payment assistance, something we can do with any of those businesses. We spoke about incubation, where we start businesses up from zero. We're not frightened to do that. If that's going to get us into a sector that we want to be in, we'll back a team. If we want more market share in a sector, we'll back a business to give us more market share in that sector. If we want to own that end customer, we'll have a relationship with that intermediary and then buy that intermediary, own the end customer. Then you can cross-sell to the end customer, a bit like we've spoken about already with regard to payment assist. So I'm watching my time here. So this is actually on payment assist now. Yeah, so 183 lending, nearly 1 million unique customers, 7,000 garages. This business, I mean, they're 5 million. There's the stats for the acquisition of that business. It's buy now, pay later it's one of those sectors which has some great characteristics. The most common deposit in the UK and Isle of Man is a 1-year deposit. What Payment Assist has, it has a product which is a 4-month product. So if you go into the garage and, I don't know, you've got to buy 4 new tyres for your car, it costs £1,000, then you pay 250 quid to get your car back, £250 a month apart, and that's you paid off the debt, the buy now pay later. So it's interest free to the customer, so it's really good for the customer. And in these times of financial hardship, this cost of living crisis really is still with us. At these times of financial hardship, it's a great product for the customer, it's a great product for the garage, because the garage takes a discount on its invoice, so it takes away any credit risk, it's got its money on day one. Payment Assist takes the credit risk and backs it up. But that 4-month loan, if you think against a 1-year deposit, I can use that 3 times. So if it's getting a 15% yield, all of a sudden that 1-year deposit's generated a 45% yield, and it's cost me 4.5%. So short-term lending is incredibly profitable for me at this point in the cycle. I spoke about the cross-selling into the million unique customers and indeed into the 7,000 garages. You can see over 80% of Payment Assist business is in garage. payment assistant's got a great opportunity just to keep doing what it's doing. It's like Conister Bank. This market is so big, it's not touching the sides of it yet. But it's also developing a payments process where it wants to be the only payment provider within the garages. At the moment you go to a garage, if you buy a new car, it's a different piece of software. If it rather than a piece of software for an MOT or parts, they want to be the only provider in there. So that's a process that they're on, because what they want to do is to be that hook that ensures that if anything that's financial services related to garages goes through them. We spoke about this earlier. I mean, small caps in the UK undervalued. We've got a discount in NAV, about 18-20% at the moment. Low earnings multiple. Our market cap's 30 million, our profit's 10 million, 3 times. So if you take away the corporate, look at the economic environment, it's actually a really good time for us. This economic environment is good because when times are hard, big banks do what big banks always do. They go like that, the provision of credit becomes squeezed. So all of a sudden, people like us see better counterparties than we'd normally see. I mean, why is John Lewis a customer of mine? They shouldn't be a customer of mine. John Lewis should be the customer of its clearing bank. So you'll see benefits in terms of competition and market size, because the competition, it just contracts. What I would say about the rate cut, when we had those 14 interest rate rises, that was against us. Because of the fixed way of lending, we were getting pushed and pushed. Now with interest rates easing, there's embedded profit within the balance sheet which just releases. We don't do anything, it just releases, because our deposits mature quicker than our lending. And finally, hugely liquid. I think there was a previous slide, I should have mentioned it. Excess liquidity at the year end was £91.1 million. That's about 3 months lending for us. We've got proven access to distribution. I mean, payment assistance is 225 against 180 odd last year. I should also have said we lend £1 million a week in the Isle of Man. We lend 6 million a week in the UK, just to give you the scale. So that's where the 372 comes from. And we're continuously profitable, and we've got a dividend. And the dividend policy is relatively straightforward. It's 10% of profits go to the shareholders on an annual basis. So when we're doing well, shareholders do well. When we're doing less well, the shareholders will do less well. We don't put more of that to the shareholder simply because we're growing. If we can deploy that capital better longer term through the growth of the business, rather than passing it back more to the shareholders. I've just eaten into, sorry.
Okay, thank you very much indeed. Let's ask a question. If you have any questions, please raise your hand. Gentlemen, towards the back here first. Please, Stephen, we'll come to you second. Thank you.
Hello, thank you for the presentation. Given that you're based, what I'd call offshore, in a crown dependency, does that provide your businesses with any particular advantages in terms of different regulation and taxation, what it would be based on the mainland, or indeed are there any disadvantages?
The disadvantage, unfortunately, I'll start with the negative, is that you're regulated by the Bank of England, FCA, and the Bank of England's equivalent on the Isle of Man, which is the Isle of Man FSA. So there's a bigger regulatory bubble that you're operating within. There is no individual tax advantage from anybody investing or not investing in Manx. It's listed in AIM. But the corporate advantage is the tax paid by a bank is 10% in the UK. Sorry, on the Isle of Man, 22% I think is the number in the UK. So that's 12% more cash sits in the business that can be distributed out. So it really helps the cash position. Disadvantage, sorry. The other disadvantage is when you're in amongst here, when I'm down in London or in Edinburgh and Manchester, you get a real sense of what this world is like. You can't do that in Isle of Man. You need to have people here, you need good managers here and a good establishment based in the UK.
Question towards the front here, please. Thank you very much.
Thanks. Yeah, very interesting talk. Could you talk a bit more about your source of deposits from it within the Isle of Man. You mentioned 20 billion, I think, available.
Yeah.
What is the constraint? Is it your, oh, what's the right word, the amount of reserves you've got? Is that a constraint, or is it, have you got competitors in terms of the interest rate you have to pay on those deposits?
There's 11 banks on the Isle of Man as well. We're on 11 clearing banks in the UK, there's 11 banks on the Isle of Man. So your competition is limited to that 11. The reason why you would, I mean, we run, that was 91 million excess at the year end. That's 3 months lending, which is kind of safe and prudent amount of money to have. If I gather too much deposits as a drag on my income statement because I can't deploy it quick enough. So it's always that balance between just judging how much deposit you need and how much lending you're going to do and just managing that demand.
You can get as much as you want as long as you keep your interest rate right.
There's no restriction on our licence in terms of what size we would grow to.
Right.
Douglas, I remember speaking a few years ago to Aldermore, and they say when you're offering a market leading rate, telling you to tap on, the money flows immediately, you turn it off here. Is that the same? Is that a fair analogy?
Nothing's that quick in Isle of Man, but we have noticed that with a UK licence, Martin Lewis mentioned us, and all of a sudden the next day we had something like 1,000 applications come in for deposits, all online, and you're going, if we didn't need that money, that would have been a real negative for us. So it's that demand management, going back to that, you just got to be really careful that you don't want to be at the top if you don't need the money, because it only takes, the people here are just so price sensitive.
Mm. And are you on the lending platforms, the Raisins, the deposit platforms like Raisin and the rest of those?
No, we do it all ourselves. I mean, Aldermore is interesting. In Aldermore Metro, that combination makes a lot of sense to me. But no, with Raisin, you'd say to Raisin, can you give me 20 million of deposits at 4%, please? And they'll go and get 20 million of deposits at 4%, add on a couple of percentage points because they do all the compliance, KYC, AML around it all as well. So they do that whole deposit management.
All right, a question here, please, yeah.
I saw one of your businesses there. I'm sorry, I've forgotten which one it was, the name of it, but I think it was involved in brewery assets, was it?
Really? Yeah, in Cassie.
Because I noticed that Close Brothers today have announced that they're selling some brewery assets. I don't know whether that will affect you. And the other thing that I've got with Close Brothers is they've obviously been involved in this motor finance, and I wondered if you've been have encountered any of that.
Yeah. Because this is getting recorded, I will suggest that put your first 2 points are linked. With us, we provided £200,000, which was the best estimate of how much it's going to cost us with regard to compensation on the motor vehicle scheme. The one thing we know for sure, it won't be exactly 200,000. Whatever it is, we'll deal with it. But we see this as an opportunity because there will be certain businesses who have got far, far greater exposure than us. And they will need to recapitalise, and the easiest way to recapitalise is to downsize and sell parts of the business. So there may well be an opportunity for us through this process.
When are the FCA going to announce their results, do you know? The decisions?
Yeah, the court is due to announce in July, and the FCA have said that they will, within 6 weeks, say what the recompense is going to be.
Okay. I know we're out of time, Douglas. Thank you very much indeed. Are you going to say for drink afterwards?
Yes.